Okay folks, welcome back to another update for silver, gold, Bitcoin and the US dollar. And today the US dollar, gold and silver have bounced off some major support areas and making further upside. Bitcoin continues in an uptrend as well. Before you go any further, make sure you hit that like and subscribe button to help the channel. If you want to support us more, go to the Patreon page, buy me a coffee. And so that also gives you access to weekly scans of bullish shares. Looking at the heat map, you can see here in the middle table here, gold, silver, still bullish on the monthly, but somewhat mixed signals on the weekly and daily. The US dollar is bearish across the board on monthly, weekly and daily, and Bitcoin likewise is a bit of a mixed bag, but bullish on the daily, neutral and bearish on the weekly and monthly. So first with the for spot gold, it's bullish on the monthly, although notice if I zoom out, you've got a bearish divergence there, lower highs on the CCI versus higher highs on the price. And that hasn't actually started to retrace yet, so just be aware of that if you're strong on bullishness on gold. On the weekly, we also had a bearish divergence here, and it's still in play. You'll see there lower highs on the CCI versus higher highs on the price, and these, by the way, monthly and weekly and all time frames are independent. And I've drawn here a target area, the 23-38% level, should it bounce to the downside. That's the minimum level it will reach, and more than 90% of the time it does hit that target area. On the daily as well, we've got another bearish divergence, similar to the monthly and weekly. Again, they're independent, but in this case, they're lining up. It's hit that resistance up there at 24.83, and that's our target area as well for the daily time frame. If I go to the 1 hour chart, again, we only take, on the intraday, we only take trades in the direction of the higher time frame, in this case, the daily. So you would have taken long trades from the 9th of August. So if I put in the long arrows, you can see there from the 9th of August, that was around this area here. 9th of August, that would have been your first entry you could have made. Nice little exit, another trade there, nice exit, and another little trade there. That probably would have been a break even or a little loss if you traded that. But at the moment, notice we always pay attention to the CCI. In this case, it's declining. There's no divergence, but the CCI is declining, in which case don't go long until we see this break further to the upside like it was back here. For spot silver, bullish on the monthly, but notice it's actually broken out of this wedge, which was drawn some time ago between these tops and bottoms. Now it's broken outside of that, giving us a bullish signal, but it's actually pulling back, approaching its moving averages of the CCI. On the weekly, it's already broken below those moving averages, and again, I'll just draw in those moving averages for your reference. You can see there, that's a bearish signal on the weekly, and it's also done that below the moving averages of the price chart as well, so another bearish signal there. On the daily, it's been bearish now for a number of months now. You notice also we had a bearish divergence, lower highs on the CCI versus higher highs on the price. Broke down, hit our initial target area, 23-38% level. In this case, it came close to hitting the 61%. Now, if it breaks below that, we're going to get a lot more bearish movement, and I've got a few diagonal lines here drawn, which it may possibly hit these support resistance areas if it breaks further to the downside. But at the moment, it's still bearish, so just be careful about going long with silver. Going to the 1 hour chart, again, we only take, at this point, it's neutral, so we don't take long or short trades until we see this break to the downside, or alternatively, if it breaks above the moving averages, then we might take long trades. So at the moment, we're neutral, we don't take any trades, but notice here, on the hourly chart, we had a bullish divergence versus lower lows on the price. It bounced, hit our target, 23-38% level. Again, just for those new to the channel, I'll draw you can see that Fibonacci range. We take it back to the previous high, and that's at 23-38% level. That's our minimum retrace level, and more than 90% of the time it hits that target. In this case, it's gone up almost as far as the 61% on the 1 hour time frame. So again, I'd like to see this break higher than the moving averages or lower to be more consider even going long or short on the smaller time frames. So for the US dollar, it's broken below the moving averages, giving us a bearish signal. Also, if I zoom out, you can see there we had a bearish divergence, lower highs on the CCI versus higher highs on the price. Hit our 23-38% target range, and it's actually still fluctuating in that range now. And very likely we might see it break below that range further to the downside. The CCI is giving us a bearish signal, so bearish on the monthly, bearish on the weekly. There is no divergence to talk of on the weekly, but you can see they're very clearly bearish on both the price and the CCI. And on the daily, it's actually resting or bounced off this minor support at 10.181, but still giving us a bearish momentum. So bearish across all time frames for the US dollar. Going to the 1 hour chart, again taking short trades, and you would have taken short trades from the 31st of July. So if I turn on the short arrows, so back there, that was the 31st, that was your first trade. Close it out when it enters the moving average range. Enter again when it breaks below the CCI and the price moving averages. Take another short entry, and you would have taken a closeout position there and taken a nice little short trade there. Now you would have started paying attention here when you start seeing a bullish divergence. But irrespective, you don't take any short or long trades. I don't trade these divergences. I just use them as a potential exit point, or more of a warning area to avoid going long or short in this case. This could have been a start of an uptrend. So that's why these divergences don't necessarily mean just a retrace. It could actually mean a full scale reversal. In this case, the daily is still bearish. So, and that's at the moment, it's actually respecting that, and it's actually turning further to the downside. And the hourly is currently neutral. So again, wait for it to break further to below the moving averages here. Again, if I draw the moving averages of that, currently it's in that range. If it breaks below that moving average range, then we take short trades on the hourly time frame. So for Bitcoin, it's neutral on the monthly. It's in that moving average range. Even though the price seems to be pretty high, I would avoid going long or short until we see more decisive action below or above that moving average of the CCI. On the weekly, that's a clear bearish signal, even though the price fluctuated a bit more to that upside for a while, but it's finally broken to the downside. No divergence to talk of, but bearish on the weekly. And on the daily, it actually bounced off that resistance at 71,950, fluctuated in that range for a while, and it's actually currently giving us a slight bullish momentum on the daily. So with that in mind, going to the 1 hour time frame, we only take long trades, and that was from around the 12th, 13th of August. So that would have been your first entry going long there. That would have been a false break. Now you could have taken a stop loss there, or watched it. Again, this is on the hourly time frame. It broke slightly to the downside, hasn't had much movement. Entered again when it broke above there. Taken another long entry. Let me turn that. That should be bullish arrows. Take another entry there. Actually, and you probably wouldn't have entered that because why not? Because that there could have been an entry, but we consider it an entry when the price is above the moving averages, including the moving average, exponential moving average 9, that pink line. So that would have been your first entry there, based on the daily, and you're currently still in a trade. Now notice it's actually broken down. You possibly could have taken a profit on that candle there, or if you want to let it ride with the price moving averages, wait till it breaks below the EMA 9 or even these moving averages here before taking any profits. So if you got value out of the video, hit that like and subscribe button. Support us more on the Patreon page where we look at bullish shares. Thanks for watching, and see you in a future video.